Hey everyone, my name is Dan Nguyen. With the Vietnamese American Chamber of Commerce, and today we have another one of our board members to talk about banking and the benefits of banking with your local community bank. So I do want to welcome Pham, CPA from California International Bank.
Hello, everybody. Thank you for having me, Dan.
Sure, it's my pleasure, and I was really excited to talk to you because, well, banking does play obviously a role in our everyday lives obviously as an individual and as a person, but there's a lot of things that go kind of behind the scenes of how a bank works and how a local community bank, just like yours, services a community. But before we kind of get into all of that, can you give us a little bit about your background and how you became president of California International Bank?
So I actually moved here from Chicago for the job. I grew up in the Midwest in Indiana, and I worked right out of college in banking. I was at my most recent place for over a decade, and this bank, they found me. They called me and said, "Hey, come and work at the only Vietnamese American bank in the country." So 2017, I moved out here. I was in management, but then in 2021 is when I got promoted to president. So,
All right. So
thank you.
Congratulations on your promotion. Now, was it having growing up in the Midwest? What was it like growing up there, going to school, and then moving to the largest Vietnamese population outside of Vietnam and servicing the community?
It's definitely different. Yeah, it's different not feeling like a minority all the time. So, yeah, it's nice, but it's definitely different. Yeah.
All right. And now, do you miss the snow?
I actually do miss the snow. I used to ride my bike to work in the snow occasionally.
Wow.
I miss it. The change in seasons is cool, but
right.
You can't beat the weather out here.
Yeah. And I've actually been in Chicago during the winter. I can understand why people like it, and I understand why people move away from a city like Chicago with this winters. So I do see both sides. So obviously, you're at the only Vietnamese-owned bank in the nation. Was that kind of the attraction why you took the job here, or were there maybe some other things that played a part of it?
Well, it was maybe a small part of it, a little bit of Vietnamese pride wanting to come and try and grow the bank, but at the same time, it's good for career development, learning a new skill set that at a different bank I wouldn't be given the opportunity to. So kind of took it as a dual thing, developing my skill set and being able to work at the only Vietnamese American bank in the country.
Okay. So if you could maybe pull back the curtain a little bit on the banking industry for people who don't know how banks operate, and maybe the two things that a local bank like yours does with in terms of loans and deposits and how it services the community.
Okay, so the way that banks make money is we take deposits. So that's like checking accounts, savings accounts, and CDs. So we take those in, but the bank actually doesn't make any money on those type of accounts. Those are actually called a liability on a bank's balance sheet. So what the bank does, though, they take those deposits and then they lend it out into the community. They just lend it out and make loans. So what a bank is supposed to do, local community banks, what we do is we take those deposits from the local community, and then we also lend it out in the local community. And that's how a bank makes money. So at my bank, what we do different than kind of the bigger banks is that we take in the deposits from everybody, but then when we lend it out, we try to keep it to small businesses that are having a tougher time getting approved at the bigger banks.
Okay, so and when you say tougher time, is it more of like their higher credit risk, or is it just to have the bigger banks have higher, more strict lending standards, and you're kind of more of a neutral, or your bank has kind of less bureaucracy, less levels of underwriting, where people on your team can get really into the financials and behind the people that are operating the business, and a little more flexible in terms of evaluating the application and approving them?
So we are definitely more flexible because all banks, no matter what, have to make loans to good borrowers. So all the borrower, like whoever, any bank, big or small, whoever the borrower is, it has to be a good one, fully documented. That's kind of just the banking rules now after what happened in 2008. The difference is you mentioned the bureaucracy, right? So at the bigger banks, because they're so big, and they get this big rush of applicants because their rates are also generally the best. When they have an exception, they just, when they underwrite, they have like a checklist. And if you don't meet that checklist, then you have to get an exception. And most of the time, the decision maker to make the exception is so far removed from the applicant and the financial statements and the review process that they just say no. It's easier for them to say no because they will just have another client to replace it with. So at my bank, we have to be a little bit more picky on our deals. So we work really, really hard to try and understand the situation and dig through any apparent weaknesses that a borrower might have.
Okay, and typically, is a majority of your lending clients were already rejected from a bigger bank, or do you even get just people coming straight out of the gate and just coming straight to you guys?
I would say like 99% of our customers have been turned down by bigger banks. That's pretty much 100, right? But and it's for a big variety of reasons, right? So I can give examples. Like one customer, they just didn't know how to do their financial statements properly because they grew so fast, and they had a simple bookkeeper, and that person just didn't keep the books properly, and she actually forgot to file tax returns for them for 3 years. So yeah. So they got turned down by the banks, and the banks really weren't giving them good reasons why they were getting turned down. So they come to me. So this is how hands-on we get. They came to me in April 2021 of last year, right? So I look at everything, and I say, hey, this is what you have to fix up to get it done. And they told me, they're like, oh, that's great. This should be easy, right? Like, I hope so. I've told you everything that needs to get done. So then they go to their CPA. The CPA sits on their file for a month, right? I call them up and, hey, what's going on? And they give me these explanations from the CPA, and I'm like, I think you're getting BS by your CPA. Let me find you a new one. They're like, no. There's a guy's gonna clean it up. 2 weeks later, they give me a call. They're, hey, you were right. Our CPA is BS now. So I then introduced them to a CPA that I respect a lot, and comes in. He's like, hey, you know that like they haven't filed their tax returns for 3 years? I said, what? They gave me tax returns. They're like, yeah, they gave them to you, but the lady who prepared them never sent them in. She just, I was like, how did they not know that? They're like, well, these guys aren't sophisticated. So then they end up finally getting the CPA ends up finally getting everything fixed up, right? And then we're in August now, just because I gave them feedback, but they had their own way to go first. So in August now, we're then ready to try and close the loan. And they had not, so we were actually refinancing a loan called a hard money loan. So a hard money loan is a loan not made by a bank, it's like a private individual. So they've never met the hard money lender. And they're trying to but whenever you want to refinance debt, you have to get a payoff letter. Right? You've gone through it with your personal mortgage, I'm sure, right? You go refinance something, you get a payoff letter. They had no way to get in touch with the other lender. So I had to go and research for them to even find out how to get in touch with the other lender. Because all they were doing was just sending a check every month.
Mhm.
And they saw the check was getting cash. So they're like, yeah, all we got to do is pay and we're okay. So finally, after about a month, we can dig it up and we finally closed in November. So that's kind of shows the hands-on approach that we take. I mean, we came in, gave them an evaluation of their financial statement, what has to be fixed, sent them to somebody that could fix it, and then even helped them figure out how to get in touch with their lender just so we could refinance the loan for them. And that was a 7-month process, but we stuck with them. Most banks would have probably said no after seeing that the financials were messed up.
Right. Yeah. Yeah. Now, was this while you were was the president? Because I would think like even at any particular size bank, it's pretty rare to me, I think, for the president to get involved this much in with the customer's loan.
Yes, I was the president. So that's another big, yeah, I am, yeah, that's another big thing from the big banks, right? So not only do I participate very actively in the decision making, but
Mhm.
you know, when needed, I get hands-on on the deals, and it's just not a skill set that everybody at the bank would have, but we're a small bank. So when you come in, you're going to talk to the decision maker and also talk to the person that can kind of give you this consultative advice.
Right. Right. Now, you mentioned rates before. Typically, the big banks will have the best rates. For community banks just like yours, are they pretty comparable, or is it just maybe a little bit higher just because maybe things got a hand holding a little bit more, or there's maybe a little bit more risk involved?
So the rates are for community banks. I mean, there's some community banks that do that because of the asset class they go after. They may just give away the rates, but generally rates at community banks are going to be a little bit higher, right? Because usually with a bank, when you go to a bank, the banks compete on credit, pricing, or execution, right? So credit risk, not many banks are really going to compete. Some banks will compete on credit risk, but not many do. And so there's just pricing and execution. So you can usually you compete on 2 of the 3. You can't compete on all 3. And if you compete on all 3, then you're just going to go bankrupt. So what the big banks generally compete on is the pricing. So we have to compete with execution. So if they come to us, I mean, if we won't do it most of the time, the majority, they're going to go hard money and pay a lot more.
Right. Right. And you good thing you mentioned execution, which kind of gets lost in all of kind of loan shopping. But if that you mentioned refinance, personal mortgages for, and I helped someone with getting refinancing too, and they went through one of the largest mortgage wholesalers in the country, but it was like a belabored process, took way longer than it used to. So, hey, we need this, all right, gave you all that. All right, and we need this. Oh, this happened and we can't do this. And like, you can't just throw up your hands. And so what should have been 30 days or less, turned into 60 days. And in that time, even though, we rate locked it, the interest rates went up by the Fed, right? So that anxiety kind of kicked in too, right? And so I thank you for mentioning the execution, because not a lot of people, you hear from mortgage bankers a lot, but not a lot of people know that, hey, you can close this loan in 15, 30 days, pretty smooth is maybe that's something people are willing to pay for.
Yeah. So when I say execution, I don't even mean like speed. I just mean simply getting it done. But there's been so many times when people come to me and they say, hey, I got this pre-approval letter from this other bank. And I say, well, okay, go with it.
Mm-hmm.
It's a great deal. Go with it. And then, 2 weeks later, they're like, hey, I don't think they're coming through on this pre-approval letter they sent me. I tell them, well, that's just kind of how it is sometimes when you go to a bigger institution, because you kind of have not bad, but sometimes you just have a sales guy who isn't a part of the credit decision-making process. So they may get it through, and then they may get it through some initial screen, but then and it gets turned down later. But at the smaller local community banks, like the smaller ones like mine, I mean, I'm looking at the file. I'll tell you right away if we can do it or not. So that's a major difference.
Yeah. So in the story that you shared, you mentioned, working with the CPA, and if I recall correctly, you have a CPA license as well, correct?
Yes,
Yeah.
I have a CPA.
All right. So tell me what other designations you have as well.
So besides the CPA, I'm also a CFA charter holder. So that's a chartered financial analyst. And then I have like some stuff with mortgage banking and anti-money laundering.
And anti-money laundering, it kind of broke out there, so I want to be sure it's anti-money laundering, not just regular money laundering.
Yeah.
Okay.
Anti-money laundering. Yeah.
So, speaking of CPAs, you referred this particular customer to one you work with, and I have clients as well that for their banking, their CPA is essentially an outside CFO. So can you talk a little bit about the importance of having someone like a CPA to help you get a loan from a bank like yours, where maybe like obviously the client before didn't have one, and then obviously at the end of the road they went with the one you recommended?
Yeah. So it's good that if you don't know how to keep your own books, then it's well worth the money just to outsource it, because you're going to save the time and then the technical knowledge of looking stuff up. But in this situation, there was no balance sheet that was done properly, and they didn't really have the time, or they probably had if they said, hey, I want to be a financial statement expert, they could do it. But if you don't have the time, then just spend a little bit of money on the CPA so you can work on your business, and then they fix it for you, right? I think it maybe cost them like $1,000 to fix or $2,000 to fix, but then the time that they spent on that guy, they went and go make like 50 grand themselves. So it's well worth the trade-off.
Yep.
So it's not just my bank that you need a good CPA, it's all banks actually.
Yeah. And for you, do you work pretty closely with CPAs a majority of the time, or do you have clients that are pretty hands-on, that they're maybe the main point of contact, in getting the loan and all the financial information that you need?
So the CPA so initially the client will try to avoid getting their CPA involved, but when discussions go and questions happen, usually they end up having their CPA answer all the technical questions. Because like stuff like accrual accounting, why did receivables turn? I mean, the clients, they're just like, well, I get the money, I pay my bills, right?
Yeah. And I think this is where CPAs really, will show their value, not just putting the books in order and putting the financial statements in order, but essentially helping the business get a loan.
Yeah, they would be able to help the business tell the story of why they need to get the loan. Right? Because I have some, you don't want to go to a bank sometime and say, hey, give me $1 million. Then you say, well, what are you going to do with the money? I'm going to put it to good use, right? That's not really good enough. And I said, well, what is this million? How much revenue will this $1 million make? Like, I'm not sure, right? You don't want to go to a bank like that. You want to, when you come to the bank, you want to have a set plan on how every single dollar is going to get spent, and how when you spend that money, the return you're going to get on it. And some business owners are savvy enough to do it, but generally they will have to go to their CPA or someone like the chamber's chairperson, Catherine. She helps people with issues like that. So that's more like higher level CFO stuff.
So maybe let's talk about how business owners can put themselves in a position to, best qualify for the loan, generally speaking, right? So obviously having those accurate financial statements, but what would you add to that list as characteristics of a business that would, basically put their best foot forward the moment they step into your door?
So a very highly underrated thing is a business plan. Just like maybe 1 out of 10 people come with a business plan. And like a realistic, viable business plan that you actually thought through. Like, again, some people say, I'm going to make $1 million. It's like, okay, why? What supports that? Like, you can't say that I'm going to open this restaurant and then make $1 million. I'm like, well, how are you going to make $1 million if like the Domino's or the franchise right next door is only making 100 grand? It doesn't, the market doesn't support that. So a business plan helps. And very, very important in that business plan is how you're going to use the money. Because banks aren't allowed to really just give you money and then you figure out what you're going to do with it later. Like every dollar has to be accounted for, like why you're taking that money and then how you're going to use it. So that's the business plan and the financial statements. They kind of go hand in hand, but they're two big important aspects. And then personal credit. You should know what your personal credit is also before you apply for a bank loan. I had a lady, we were ready to get rolling. The company made a bunch of money. Everything was great. I said, well, I got to run her credit real quick before I issue a letter of interest. And when I ran her credit, she had a medical debt of like $200, but it crushed her credit score. And then she had a credit card debt of $1,000. And she's applying for a $5 million loan, right? So a $200 medical bill and a $1,000 late pay on a credit card was keeping this woman from getting a $5 million loan. Kind of just because she never bothered to look at the bank statement and pay off that credit card bill. She claimed that she let a relative use a credit card and it was that person's responsibility to pay. Well, it is that person's responsibility, but it's on your credit bureau. It's also your responsibility. And then the medical bill was from like 3 years ago. She said she just ignored it. But it's only $200. So it crushes your credit. Her FICO was like under 600 because of those two minor issues.
So this is actually
so every
really,
once in a while we work. Huh?
actually you're making a really good point where business owners coming in for the first time for a business loan, they may think, hey, this, because it's for my business, they don't need to run my personal credit because it should not be affected. But obviously in the example you're giving, they may necessarily not be personally on the hook or not. Maybe there's a personal guarantee, but regardless, the principal or the business owner is going to have their personal credit run, right?
Oh yeah, 100%. So personal credit is a big part of the lending process, and that's actually why we get a lot of the turn downs too, because they'll go to the big bank and, like you said, they like, oh, my business is doing great, and then when the credit is run, I mean, it'll be like silly stuff sometimes. Like for some reason, they have like these credit cards with $1,000 limits, and then they will run it up, but it'll be 5 or 6 of them. So they have 5 or 6 credit cards with $1,000 limits, and then they run it up to like $800. So $800 is like $4 grand in credit card debt, but then their utilization rates are high, so their FICO gets crushed because of it. But if they just close those accounts or paid them off and then got one big credit card, and it was $4,000 over like a $20,000 limit, their credit would be great. But some people neglect that stuff. They come in and then it prevents them from getting approved.
Yeah. So we got business plan, personal credit. Anything else that's on that list that would help a business owner qualify?
So one thing is also to kind of businesses need to realize what they're getting into. Like when you apply, when you apply for an SBA loan, and you have to be all in. That means if there's not enough collateral that the business has, then they're going to go after personal collateral. So you just have to be all in and believe in the business, because there's really no way around it.
So can you elaborate on, so they looking for like, hey, this kind of maybe your only source of income, things of that nature? So
like there'll be a situation where somebody comes in and they own their own house, and there's a lot of equity in the house, and then they want to open up a new location, let's say, right? But they won't own the building; they're going to rent it out, but they need money for the tenant improvements. So those tenant improvements are not considered collateral, really. Even though you may have to spend $1 million in terms of collateral, it's not collateral at all. So then the bank will say, well, you have equity in your house, you can get this loan, but you have to give us your house. And for even though people feel like, sometimes I get people saying they're offended by it. It's kind of weird. Yeah, they're like, I have a big viable business, I should not have to do that. But well, actually not, it's the rules. So just kind of realize what you're getting into. Like every bank wants to approve good loans. All banks want to approve you. Like, banks are generally looking for ways to approve you. And some people, they get offended by questions sometimes, but that's just what a bank has to do. Like with that lady, I had to ask her, like, why didn't you pay this card? Like, why didn't you pay these credit cards? Why didn't you just pay this medical debt? And they're kind of personal questions, and I wasn't trying to offend her. It's just that's just what we have to ask.
So I know for in the personal mortgage industry, if there's issues with the things like that, then they could bring in maybe a credit repair specialist to do that. Now, is that similar? Is that kind of a solution in kind of the business situation, even for personal? Like maybe it delays the loan a little bit until the business owner repairs the credit. Is that a common scenario?
So we don't really ever refer to credit repair specialists, but we do. I mean, I just give them advice on what they can do, but we never refer to a credit repair specialist. Generally, we are okay with, so this is what makes us different, right? We're okay with the credit issue as long as it has a good story to it.
Got it.
Yeah.
Interesting. Okay. All right. So, personal credit, business plan, and there was the third thing I slips in my mind.
Oh, understanding what you're getting into, and just don't be offended by all the questions, because we have to look under every single rock.
Right. But again, I think it goes back to execution, where you guys provide the biggest benefit is like, okay, now when we found what's underneath this rock, we can find out the story or help, or find out ways to fix it, rather than maybe when these bigger, larger banks are like, all right, we found another rock, can't help you. Next.
Yeah. So just going back to that one client, right? Most people that I referred to the CPA, most people would have said, oh, well, your financials are messed up. We're over, right? But in that case, I said, your financials are messed up. Here's what you got to do to fix it. Here's how you fix it. Here's who you can go to fix it. And when they finally got it fixed, we did it for them. So in their case, they were actually a little loyal to us, because they did fix everything, and then they stuck with us, even though after they fixed everything, they could have went to another bank and got a significantly lower rate.
Yeah. Very good. So anything else? That's a really good list. Anything else that should be on that list for business owners?
If you do that, you've got a pretty good shot if your business is making money. Yeah.
Okay. All right. So thank you, Thanh. Man, lots of good information here. Kind of pulling back the curtain on, the banks, community banks making the loans, and how business owners can really put their best foot forward before coming to see you, so that they can put themselves in the best position to qualify for a loan from your bank. So if someone is looking to get a loan and maybe they've been rejected from some of the big banks, what's the best way to get in contact with your bank?
So if you go on our website, you can fill out the form, or you call into the branch and you ask for me, then they'll connect you. Or you
Okay,
can hit me up on LinkedIn, hit up Dan, anything. I respond to all requests pretty quickly.
all right, right. This is pretty rare. Like I said, like the bank presidents usually, not in their hands of all. So I appreciate your time. Thank you for all the things you do for the community, even with the chamber. Time is our most valuable resource. We can't get back more of our time. So thank you for sharing your time with us. And we'll talk again soon.
All right, thank you. You have a good one.
All right.